What's going on, guys? Thanks for tuning into this video today. And in this video, we're going to be talking about a stock that I am interested in. I'm keeping my eye on. I'm not buying it yet, but it is something I plan on keeping on my watch list and following for however long. Hope you guys enjoy this video. As always, if you don't mind hitting that thumbs up button, that really does help me out in a huge way. It really helps this channel grow, and it really helps get this video out to more people. It really helps a lot more than you can even think of. And on top of that, don't forget to subscribe to the channel if you want to see more videos like this, including stock market news, stock market related content, and everything personal finance in between. So the stock we're going to be talking about today is the Real, ticker symbol REAL. This is a stock that is around $14 at the time of me filming this. It might fluctuate a little bit, so it might not be exactly 14, but it's somewhere in the $14 ballpark. This company currently has between a $1.2 and a $1.3 billion market cap, has a trailing PE of under 5 right now, guys, under 5, has a price to sales ratio of around 3, and has a price to book ratio also around 5. This company went public in June of 2019, and as for what Real does, it's an online consignment store for luxury goods. They have items in many different categories, including for women, men, kids. They have watches, they have home art, they have a ton of stuff on their website. They had approximately 582,000 active buyers in the year of 2019. They do have a few different retail stores in California, New York, and San Francisco. Some of their top luxury designers that they work with include Cartier, Chanel, Louis Vuitton, Gucci, Prada, Rolex, Tiffany & Co., and Valentino. So there are a lot of high quality products that you can get from this store. From 2017 to 2019, their revenues were increasing steadily year over year. Their revenue went from 137 million to 213 million to 318 million in 2017, 18, and 19. The majority of their revenue does come from consignment and services. Gross profit has also been increasing steadily year over year from 87 million to 136 million to 203 million in 2017, 18, and 19 respectively. However, the net losses have also been increasing year over year. They went from 52 million in 2017 to 75 million in 2018, and now they're at 96 million this past year in 2019. And here's one thing that really concerns me about this company, and probably one of the main reasons I'm not buying into it just yet. It's because their operating expenses take up so much of their revenue, almost all of their revenue, if not all of their revenue some quarters. 2017, 139 million in total operating expenses compared to 137 million in revenue, okay? 2018, 210 million in operating expenses compared to 213 million in revenue. And in 2019, 301 million in operating expenses compared to 318 million in revenue. That means in 2019, 95% of the revenue was taken up by operating expenses. This past quarter, they did 78 million in total revenue with a gross profit of 49 million. And again, operating expenses took up just a ton of their revenue. This past quarter, 91 million operating expenses costed them. 91 million. Their GMV is currently down from 252 million to 245 million year over year. NVM is actually up year over year, ironically enough, to 189 million. Their number of orders were also down year over year from 477,000 to 550,000. Take rate is also down year over year from 38.6% in September of 2019 to 35.4% this year in 2020. Their active buyers are still rising though. They're at 617,000 this year compared to 543,000 in 2019. That's over a 9-month span for the record. And average order value is also up year over year, coming in at 446 compared to $438 in 2019. So let's jump into the rest of the balance sheet now, okay? And this is going to be comprised of their most recent earnings, which really wasn't that long ago. They have 343 million in cash and cash equivalents, 52 million in short-term investments, and that compares to the numbers at the end of 2019, where they had 154 million in cash and cash equivalents and 208 million in short-term investments. This was probably allocated differently a little bit just due to the Rona, and a lot of companies didn't know what was going to happen, so they figured it might be a little bit better to keep a little bit of cash around as opposed to put that money into investments where they might have to liquidate it very quickly. Total assets are set at 616 million compared to 466 million at the end of 2019. Current debt, so that's the debt they have to pay within the next 12 months, is set at 15 million. Long-term debt, 148 million. So if you add up the cash and cash equivalents and the short-term investments, and you also add up the debt they have, both short and long-term, it comes out to about 2.5 ratio in favor of cash, which is not too bad. I like seeing that. I really do like that ratio. As for the income statement, for the TTM, which stands for trailing 12 months, if you did not know, so that's how much they've done up to this point in this year, they have 282 million done in revenue. So they're most likely going to do over 300 million in revenue this year, I would assume. I think that's a pretty safe bet in my personal opinion. But again, operating operating expenses for the trailing 12 months, man, it's still set at 280 million, so that's taking up almost all of their revenue. As for their net income for the TTM, they have a loss of 97 million, which really is not that great in my personal opinion. I don't like seeing that, especially because it's been down, because that net loss just keeps growing and growing year over year. And if you look at the cash flow, you could probably guess that's probably not the prettiest thing either. They have negative 94 million in free cash flow. So this is a company that's still losing a pretty good amount of money compared to their market cap size. Now, the virus obviously had an impact on this business for a lot of reasons, so let's go take a look at that. The virus pandemic has materially impacted the company's business operations and results of operations in 2020. For the 3 and 9 months ended September 30th, 2020, net revenues decreased 4% and 5% compared to the same periods in 2019, respectively, primarily due to adverse impacts from the virus pandemic on the business, as further discussed below. Operations in the company's fulfillment facilities were initially limited in accordance with shelter-in-place orders, resulting in operations below full capacity. However, operations capacity was no longer limited by restrictions related to virus during the 3 months ended September 30th, 2020. In-person white glove consignment appointments were temporarily suspended and augmented with virtual appointments, but remain an option for the consignor base. All luxury consignment offices and retail stores were temporarily closed for the varying periods of time, but were all open during the entirety of 3 months ended September 30th, 2020. While the continuing and ultimate impact of the virus pandemic is highly uncertain, the company expects its business operations and results of operations, including its net revenues, earnings, and cash flows, will be further materially adversely impacted, including as a result of possible new restrictions to curb the spread of the disease, decreased productivity due to shelter-in-place orders, and a slowdown in the U.S. economy and uncertain global economic outlook. The company believes that its financial resources, along with managing discretionary expenses, will allow it to manage the anticipated impact of the virus on the company's business operations for the foreseeable future. The company believes its existing cash and cash equivalents and short-term investments as of September 30th, 2020 will be sufficient to meet its working capital and capital expenditures needs for the next 12 months. So clearly there's been an impact here. The retail stores shut down, they couldn't operate at full capacity, operations were suspended. So things happened here that really was not the business fault and that were out of control. As for the CEO, her name is Julie Wainwright. She is actually the founder of this company, which does interest me. You guys know I like founder-led companies. She used to work for Clorox doing computer software. She was the CEO of Berkeley Systems in 1996, and she was the one who really changed that company's strategy and actually led that company to an increase in productivity, which I really find that interesting because before she took over, they saw a 2-year decline in productivity. So I do find that very interesting. She was able to change that company's model and fix that. She then became the CEO of Pets.com, and then they began to seize operations, which I also find interesting and which kind of raises a red flag for me. Then she went on to find RealReal in 2011. I have watched some interviews on her, and she said that the main goal of RealReal was to mainly create space where Amazon, eBay couldn't replicate it. So that's something I find extremely interesting because that was a concern I had when I first started looking into this company. I didn't know if Amazon was just going to be able to take over because Amazon just keeps knocking companies off left and right like it's nobody's business. She was saying she thought companies would copy their model and no one ever did. So that means that there's really no competition in this space. And if you look into it, there really is not any competition. That's the thing. There's really none. Like if you're buying like a used Louis Vuitton bag, I don't know where else you're going to get it but here. Like this is the place. So I do like her, I do like what she's doing, but I do have some concerns which we're going to talk about in a second. But first, let's take a look at what analysts have to say about this company. So analysts expect this company to decline around 3% this year, around 3%. They also expect this business to grow in sales 36% next year. For the current quarter, analysts expect this business to decline 117%. They're supposed to grow 5% next quarter. They're supposed to grow 10% for the year, 20% next year, and 38% for the next 5 years. So here's the thing. This company is kind of interesting to me, but it's also kind of not. But let's start off with going over the pros. Like I just said, this company is interesting to me because they really have no competition. The example I just used, if you're gonna buy a Louis Vuitton bag from anywhere, I don't know where you're gonna get it besides RealReal. Like that's the place to go. I actually even asked Financial Education the other day during his live stream because yes, I am in his private group. I'm actually going to make a video reviewing that very soon of whether maybe that's a good investment or not, but I want a little bit more time to go through some of the courses that he has and just the private group in general and get a little more familiar with it before I give, I guess, an expert opinion, you could say. But anyway, I asked him what he thought of RealReal, and he said the same exact thing. He said there's really nowhere else to go. They don't have any competition. He thought it was a good buy. It's also interesting to me because Christmas time's coming up, and a lot of the products that they sell from their consignors, people like. But as for my concerns, first off, it's those operating expenses, man. Like those take up a ton of their revenue. Like I can't even believe it. It blows up my mind how it consistently takes up 90 plus, if not 100+% of their revenue every quarter, if not every year. I really want to see those margins improve before I consider investing in this company. Second, I don't use any of these products. Like if I was going to buy a Louis Vuitton bag or a Gucci belt or anything along those lines, I would like to maybe go buy it from them, see how my experience was, maybe talk to the customer service team, how fast did they get back to me, did they cooperate with me, things like that. But I don't use any of these products, so like, yeah. And lastly, I did just use this as a pro that Christmas is coming, but I do have some concerns about how Christmas is gonna look this year. And what I mean by that is obviously a lot of people got laid off, a lot of people lost their jobs, maybe they haven't found a new job, maybe they found a new job, but they're still behind on their mortgage or their car payments, maybe there's just some things they're behind on that they need to catch up on. Who knows? I just have a lot of concerns about the money velocity that's gonna be coming out this Christmas as opposed to years past. And obviously if that money velocity is not coming out as rapidly as it does around Christmas time, then this store could take a hit. So basically to summarize all this up, I am personally not buying this company right now, but I'm definitely gonna keep my eye on it, that's for sure. I really wanna keep an eye on it. I really like how there's no competition in this space. This is a stock I want to get into in the future potentially, but I just need to see that net income starting to increase a little bit. I need them to stop taking so many losses. I need those operating expenses and margins to be a little bit better, that's for sure, guys. But those are the things I'm mainly looking at. If this stock were to drop to like $10 or $11, somewhere at that range, I might be running a few more numbers and I may consider getting into this stock. But as of right now, around the $14 range, I don't have any interest personally. But another thing, when I buy a stock, I don't feel nervous. I feel confident and excited because I've done all my research. I know what to expect from the company. I know just about everything you can about the company. I am excited and I want to get in that stock. And the thing is, I'm looking at my individual stock portfolio the other day and I'm thinking, all right, so I say put 10% of my portfolio in RealReal. RealReal makes up 10% of my portfolio. Am I excited? And I really wasn't that excited. I was not overly nervous, but I wasn't truly excited like I got when I got Beyond Meat or Dropbox or any of those. I wasn't that excited. So that's a sign to me that maybe just take a step back and just sit on your hands and wait a little bit. That's the bottom line, guys. That's how I feel about it. But hey, I've been wrong before, I'll be wrong again. Make sure you're doing your own research. Make sure you're developing your own opinions because it's very important in the stock market and you need to make sure you're doing that. And in saying that, guys, that's gonna be it for this video. Thank you so much for watching. I really appreciate it. Let me know down in the comments what you think of RealReal, if you've ever bought anything from RealReal and what you think of the company overall. Like and subscribe as always, and I will see you guys in the next video.